Good morning, everyone. Just letting you know we are going to be beginning in just a few minutes. We wanted to allow some networking time while we fixed a few of the issues, but we are about to begin. So those who are outside, if you wanted to make your way into the conference hall, and we are beginning very shortly.
그 부분들을 만족시키고 또 하나 선도해 나가야 될 그런 비즈니스로 발전시키는 데 노력하겠습니다. 네, 경청해 주셔서 감사합니다.
I really like those ears. Now we have Will McDonough, founder at iCash Network. Will is an investor and entrepreneur whose storied career ranges from sports and entertainment management to the world of global finance. McDonough is founding partner of iCash and is driving the company's marketing, branding, and corporate initiatives leading up to its token generation event and beyond. Can you please give Will a very warm welcome?
Thank you. I thought I would take some time today first to thank Mike. This is an amazing conference. Your team is spectacular. I've been lucky to participate in many of them. Brock Pierce, who's our first investor and a huge supporter of ours, when I asked Brock how to ingratiate myself into this community, he said, just know Mike, and he was correct. So thank you for your guidance. I thought I'd take a little bit of time today to talk about lessons I've learned from my career. Tomorrow I'll be pitching iCash. If you're interested in more specifics about that, I'll talk a little bit about our approach. But my career spans over the past 20 some odd years. I started working for the New England Patriots at a very young age. I did everything there from the back office to the front office, as they say. I started a management company in 2001 to represent Tom Brady, the quarterback of the team, and his private interest, ultimately his wife. I continue to work with them, as well as the estate for Nelson Mandela, whose 100th birthday we'll be celebrating next year, or this year. In 2007, I left the Patriots and went to Avenue Capital Group, where I partnered with Mark Lasry and with former President Clinton, and we started a fund of hard closed funds where we were going to bring access to retail investors. We built that out. It's $250 million, and I was hired away to Goldman Sachs, where I managed the private capital of the partners of Goldman for several years, $17 billion across the globe, largely focused on uncorrelated asset classes. So how do we find ways to get the partners of Goldman diversification away from the largesse of their wealth? In doing so, I was approached by the World Bank, and I left and started a business called Atlas Mara, where we raised $825 million and bought 8 banks in Africa, taking that public on the London Stock Exchange. I want to talk a little bit about that experience because I think that it's very relevant to the conversation we're having here today. Token offerings are nothing new. People start to wonder about how do we regulate these things, how do we manage them. Atlas Mara was a business that I started as a special purpose acquisition company, a SPAC. A SPAC is a business, and we call our offering a token securities offering because we're a fully regulated security token. I can talk about that more as well. But let's compare those two things. With a SPAC, you write a prospectus. With a TSO, you write a white paper. You then raise capital behind that thesis in both cases. You sell shares in the SPAC, you sell tokens in the TSO. You implement the thesis with those proceeds, you implement the thesis with those proceeds. You build out your team and you sell into the capital markets, your asset. This is something that's been around on Wall Street for 50 years. My business, buying those banks in Africa, was exactly that model. The keys to our success was that we built it such that it could attract institutional investors. We built a fully liquid listing on the London Stock Exchange that global investors could day trade. We then made it fully regulatory compliant, and we made sure that we were within regulation in every market that we operated. We gave investors immediate liquidity in an asset class that they traditionally couldn't access. And we affirmed the exchange worthiness of our platform by taking businesses off local small exchanges and merging them into our global London listing. These are all the same things. These are all the same terms that you're hearing when people talk about ICOs and token securities offerings. Don't be scared by this. This is something Wall Street's very familiar with. It's just called something else. What makes an investment a security? Why are we a security token? And there's a whole debate that you'll hear over the next couple of days about security versus utility. Everyone knows about the Howey test. This is put together by the SEC. If any of those questions you see behind me are answered yes, you're a security. Secretary or Chairman Jay Clayton said recently, I've yet to see an ICO that isn't a security. So basically, let's just get over it. There's been a lot of times that people have used utility tokens as a quick way to access the markets and to raise capital, but the future of this business is going to be behind tokens that are able to be regulated as securities, and therefore regulators that can approve them as being sold to not grandmas who have the entirety of their net worth in it, but institutional investors. All of these things are okay. We shouldn't be scared by that. So what's a stock versus a token? You know, I love this chart because it talks a little bit about what securities were back in the day. My grandfather worked in the Boston Stock Exchange in the 40s, and when he used to sell stocks to people, what he sold them was a participation in revenues of a company and the capacity to vote on the business dealings of that company. In 1950, the average percentage dividend paid on an S&P 500 stock was 7%. Today, it's 2%. Businesses have gotten away from the revenue participation. They reinvest, they give bonuses, they reinvest in R&D, all things that are good for growth, but securities and stocks aren't what they used to be. So what's a token? A token is something that gives you access to the underlying utility delivered by the platform you're investing in. What if Amazon, Netflix, Facebook, Google, Twitter, what if these major companies tokenized instead of securitized? Bad word. Instead of issued stocks. Amazon has more members than shares. So if every person who wanted to access Amazon had to buy a token instead of buy a share, that might be good for Amazon. Netflix, more subscribers than shares. Facebook has 4 times more members than they do shares outstanding. Google 2 times as many. Twitter has 17 times more members than shares, but I think we all know that that's a larger issue that they're dealing with and how to monetize that. But the point here is token offerings are selling access to an underlying utility. This stuff is okay. Don't be scared by this. And if some of these businesses could go back and do it again, they might choose this path. So this is totally speculative, right? But what happens when supply is elastic? Nobody can tell me in this room how many shares outstanding Amazon will have a year from now. Nobody can tell me how much dilution I as an Amazon shareholder might take if they split whatever they might do. And when that's the case, how can you define what price is going to do? And in the token offering, my project iCash is issuing 1 billion tokens. Total. Forever. That's it. When you lock supply, and when your entire business model is driving demand, what do you think is going to happen to stocks, to token prices? One can only speculate. I put up this interest, I had to look it up because it's been so many. Uber just completed their round S, and I had to count what letter S was. 19 funding rounds. So if you were an early adopter of Uber, of which I was one, you have been diluted 19 times since you backed that company and believed in their vision. Now there's been great appreciation, that's all good. But why is it that if I tomorrow want to take an Uber, and it's my 10,000th Uber ride, you, whose first Uber ride it is, pays the same? I should have been able to secure my access to that utility at the time I became an adopter of that service. That is tokenized securities, and that is buying into future access and future utility. This is the future of this business, I believe. So let me tell you a little bit about iCash and what we're doing here. Again, the pitch is going to be tomorrow, but there's things that we've learned from previous models that we're employing that I think are helpful to all. And part of my energy here is to help anyone that I can with their projects. iCash's global opportunity is that we have 70 patents and trademarks that we have filed for and secured across 100 countries. Canada, China, all of Europe, Hong Kong, Israel, Japan, Russia, the United States, the World Intellectual Property Organization, and South Africa. So our opportunity is for peer-to-peer wagering on any live verifiable event. A wager is the perfect machination of a smart contract. A versus B on C for D. You could fill in any one of those variables with whatever you want, a currency, a commodity, a sport event, who's going to drink a sake bomb faster than the other person, which my partner Jonathan Lee proved to me was him on Saturday night. You can bet on any live verifiable event on our platform, but what you can really do is create any smart contract that you want to create. And what we're truly building is a settlement engine for anybody to bet on anything. If you want to bet on Bitcoin being below 12,000 in 42 days, so long as somebody will take the other side of that bet, if you will, it prints on our platform. Another difference of what we've tried to do is we're live now as an HTML site on gofaceoff.com. You can place wagers now. We're legal in 39 US states, and that's the first market that we're launching in. The blockchain is not necessarily proven. I'll make that point in a minute. The other point, the thing that I learned from my Wall Street experiences is you have to have an institutional quality team to attract institutional quality investors. Ling runs our decentralized solutions, building all of our platform, an amazing guy. Our chief investment officer, Magnus, MIT guy, managed $10 billion. We're a blockchain business and a cryptocurrency that has hired a chief investment officer. Because when you buy our token, you care about the volatility of our token. You don't want different exchanges trading us all over the thing in extreme volatility. We've hired somebody, very, very high-level person, to manage that process. Our chief operating officer is the former head risk officer for the state pension of Massachusetts. Our chief economist is a professor, Max Wolf, who studied currencies for 20 years. Our head of Asia, Jonathan Malvos, lives here in the region. His wife's Korean, and they live in Japan. Our head of strategy, Scott Walker, who many of you know is Brock Pierce's partner at d10e Fund. And our head of digital is Maya Vujinovic, who ran innovation at GE. These are the types of teams that these institutional investors deserve, and that's part of what we're bringing. I put up this picture of these two phones and these two devices because this is kind of the future that we have to track as well. I used to love my BlackBerry. I couldn't put it down. But the iPhone took over not because it was a better device. It actually wasn't at the outset. But because it was an operating system on which people could build applications and drive adoption. So what's going to happen here between Ethereum, EOS, Cardano, some of the great projects out there, is it remains to be seen what they're going to do and what scalability their platforms can deliver. We at iCash are building across all three of those platforms. I worry that some ICOs come up here and talk about how, oh, we're building on Ethereum. Well, if you're investing in that, I think you're a levered bet on that platform's success. We're building on multiple to hedge out that risk. And if people want a BlackBerry versus an iPhone, we're going to be available on that. And I feel like that's where this industry needs to go while these things start to suss themselves out. I found this fun painting from Norman Rockwell with an old army guy who has all these tattoos on his arm of his ex-girlfriends. The issue for me with the blockchain and the indelible ledger is once you make an entry into it, it's done. It's irreversible. You can't call your bank and say, I want to cancel that wire. It's in. Don't you think this guy wishes that he could go back and before he maybe committed so much to his girlfriend, made sure she was going to be his wife? When I make entries into the blockchain, they're indelible, immutable, irreversible. So what we've created at iCash is a proof of trust protocol that will sit atop any blockchain that we exist on. And what happens is at the end of any event, an oracle will affirm the result, and you have 30 minutes as a participant to contest that affirmation. It gives you an extra layer to say, hold on a second, that independent node, that oracle settled this bet wrongly. Bitcoin is below 11,000. The Patriots beat the Eagles. Something's wrong here. And we have built into our revenue model 75 basis points is our fee, not 10%, 75 basis points. 25 basis points of that goes to an oracle, and 25 basis points of that goes into a pool for this proof of trust network. So that we can affirm that every entry into the indelible ledger of the blockchain on any smart contract that we deliver through our protocol is going to be accurate. I think this is very important also for the future of the blockchain. That's what we're up to at iCash. I'm here to hopefully be helpful to other businesses that are finding their way. I think there's a lot of lessons that I've had in my career and that we've all learned from history that can be employed as this movement develops. I'm incorporating many of them myself. I'd love to learn from any of you, some other of your foundings from your careers. Thank you to Henry Chung, my advisor and friend here, partner Draper Athena, Tim Draper's partner, who's been a great guide in the area, and Jonathan Lee, who I was ribbing before from Yellow Digital Marketing. Thank you for all of your guidance. You know, having local partners is so important, and thank you for welcoming me to Korea and for inviting me.